Hey guys, it's Will. I wanted to talk about the markets and any sectors and stocks that might be doing well in this period of time. If you've been watching my videos for a while, you know that I've been talking about this for a few months, quite a few months now. Like I put here, um, January was where kind of started. I'll show you on the charts, but I said markets keep dropping right here. Crypto crash, and then continuing stock market drop January 28th. Markets are volatile. And then Fed crashing stock markets. That was April 6th. There's a few bounces, on occasion. But market tanks after Powell talks. That's April 22nd. Bitcoin break below 40,000. I was talking about Bitcoin for a little while too. Markets continue to tank. That was just on May 6th. So hopefully you've been following me, and I've been trying to do my best to figure out, what's happening. But if we look at the charts, like say we go, I'll just use a weekly chart. If you use a weekly chart, you see this beautiful uptrend, and then you start to see where you break down below the 50. And this is right, January you had this red volatility stop and this downtrend here. And then we had a little bounce here, and those are called relief rallies. So now I'll go back to the daily chart. I can scroll out. When you have when you start to go down in January, you don't know that it's going to be any different than these ones, but you did break the 50. There's kind of a break here and back here, but then you broke the 200. You had a few failures there where it kind of came back. So you're going to get these short little rallies here. You don't know if that's going to turn into, an uptrend. If this supported at the 50 and started to go up, it would have been a different scenario. The other thing you can look at, even on a weekly chart, is the breakdown below of the price of the momentum price percent oscillator. If we go to daily chart, you see this crossover down here, and that's the zero line as well. When you get below zero, it's usually around the time you break the 50. You had an attempt to come back here, really strong. It got up above the zero line momentum, got up above the 50, but then it broke. It bounced down off the 200 day. And now, if you look at the daily, you can see the momentum is crossed down below, and it's been down the whole time. So if you use this criteria of it having to cross at least, then you would avoid that, getting in on any of these downtrends. And also, you could have a criteria that the blue moving average of the price percent oscillator has to be in an uptrend. It has to be going up. Or you could say it has to be above zero. We're kind of in a down channel right now. You can see it bounce down off that upper channel. We'll see if it supports at this lower channel. So I've kind of drawn two lines there. There's also this downtrend here, which needs to break and establish higher lows as an uptrend. And if we look at the S&P 500, it's all kind of the same. Kind of a downward channel, and we're near the bottom. So we're going to see what happens. Same thing here. It broke this line here, so I can sort of take it, make a channel, and see, it's got to break this and start to establish. But that could just be a little rally within the downtrend. So you have to watch. So you might be watching for a bounce and an uptrend just for, a short period of time within this channel. But you need to see a lot more stuff to see it, get out of that. And the Dow Jones, same thing. You got a downtrend right here, but it's in the context of a bigger channel. So I've got another tab. If you want to get TC2000, check out the link in the description below. That's what I use for this charting. And you can get a free trial or $25 off your purchase. I've got a US gold plan, and I use US real-time data as well to get the real-time stock data. So right now I'm looking at the pre-market, and that's the way I can see what's happening today. If we go here back on the markets tab, so I created a watch list called markets, and I just put the markets in here, and also the VIX, the volatility, and that's all in one. And then you've got all these different tabs. You have a lot of data within a short amount of space. So with this other tab, I've got all my US sectors that I like, US sector ETFs. But what I do is I'll scan. There's different things I do. I scan for strong, ETFs, or I also do this where I look at the 5-day percent gain to see what's doing a little bit better lately. So we see silver kind of having a bit of a rally here. Silver miners, steel. So that's where, these are the ones if you're going to get in and try to, these are really low momentum. It's really at the bottom here. But once you start to see a turnaround here, you can try to get in on that. Gold juniors as well. You see the little green. So these are Heikin-Ashi candles. So they show average of the previous candle. And it smooths out the trends a bit so that you don't have as much choppiness. And you can see with the green volatility stop, we're above it and it's green. So there's a few things doing well. Obviously, natural gas. And then there's various oil stocks. OIH is oil service. You can see how it's coming back here. XOP is exploration. Another one I'm looking at is BOAT. It's a global shipping ETF, and that's been pretty strong here. So these check marks, these are called conditions. So you can add a condition instead of just a value, and you can say whether it's above the daily V stops or above the weekly or above the monthly. So I look for things that are ideally in a strong uptrend on the weekly and the monthly. So if we go to monthly, it's above the stop, not too strong on the monthly, but it's above. And it just turned above on the weekly as well. So it's not a great one, but if we look at, say, natural gas, if we look at monthly, that's, in an uptrend here. Weekly as well. And then, so that gives you, the idea that it's at least in a stronger, longer term trend. And of course, there's other scenario where you might be just starting to break out. So it has bad monthly and weekly trends, but it's starting to pull out. And that's a riskier situation because you don't have an established longer term trend, but you might try to get in on a initial breakout that's might turn into a longer term trend, but that's a riskier situation. So right now, there's not a lot that's obviously oil and gas. XLE is another one. It's got a strong monthly. Oh yeah, commodities. You might, there's the commodity index, which is various. This one includes wheat, energy, and metals. But so I just look at the 5-day to see what's currently kind of strong, and it may or may not be part of a longer uptrend. So once you have the ETF, you can click on this button called Open Component Watch List. You see, like for example, FCX is the copper company, and you can decide whether you want to just buy a stock or not. So those are how you find stocks within an ETF or a sector that you might want to. Like cybersecurity is, a little tricky because it's tech. It's a high tech stock, but it's poking out. There's a little bit sometimes of the alternative energy stuff is perking up a little bit. You see here, but it doesn't have a weekly or monthly uptrend in terms of the Heikin-Ashi candle. So you could be bouncing off the 50 or the 200 or so. There's little rallies that you can get involved in, but may not turn into a longer trend. So you have to be careful with these ones. But all right, hopefully that helps. And if you want to get a TC2000, don't forget to check out the link in the description below. It's a great product, and I hope you enjoy it. Talk to you later.